Hello and welcome to Finextra. I'm Emily Haller and I'm here with Steve Pulley of Thomson Reuters, and we're talking about the ongoing KYC challenges for financial institutions and corporates. Thank you for joining me.
Thank you.
What are the critical industry challenges around KYC and client onboarding, and how will these change in the next 12 months?
So we see three primary areas of challenge. We've just run a survey of a little over 800 financial institutions and corporates to ask them this particular question. Over 60% of the financial institution respondents said that their level of regulatory engagement has increased materially over the last 12 months. We know that's driving some significant cost challenges. The average respondent is spending $60 million a year on their client onboarding and KYC processes, ranging up to $300 million at the top end. And it's a number that's growing. It's growing about 19% a year. Now that's coming at a time where the investment banking industry is under some significant pressure. Volumes are down, revenues are down. In the asset management space, AUM's down. So there's a real profitability challenge that continues. And client onboarding really sits at the intersection of those areas. The third area of real challenge that we see is around fire drills. The situation in Panama with the Panama Papers has precipitated various responses around the world, including the FCA giving the banks here in the UK 7 days to respond with details on who they have relationships with, whether they have relationships with that particular law firm, whether they have relationships with the structures advised by or managed by that particular law firm. That is an enormous challenge for these banks to find that information and assemble it, given the way their data is stored and fragmented in such a short time frame. And we expect more of this to continue over the next 12 months.
So how do these issues impact client relationships?
From our survey, what we found is the time to onboard customers continues to increase. Over the last 12 months, the average time to onboard a corporate increased 22%, and the financial institutions expect it to increase another 18% over the next 12 months, to an average of about 28 days. But the averages don't tell the full story. You've got to look at the extremes. Over 30% of our corporates told us that the average onboarding time was in excess of 2 months, and over 10% of the corporates said it took longer than 6 months to be onboarded. When we asked them the specific challenges and pain points of dealing with their financial institutions, they said it broke down into a few areas. The first was different information requirements across their banking providers. The second was the number of different touch points that they face during the onboarding process. And the third was they're being asked for information they've already provided or that's available in the public domain. It just doesn't make any sense to them.
It sounds like there's quite a bit of disconnect between financial institutions and corporates. What were the findings from the survey on this?
So the first point we touched on was around the number of touch points. So we asked the banks, how many times do you think you touch your customer during the onboarding process? They said 4 times on average. We asked the corporates, how many times are you touched by your banks during the onboarding process? And their response was, on average, it's 8 times. It's a huge disconnect in their interpretation of what the client experience really is. The other area was very, very interesting. It was around the extent to which corporates keep their banks up to date on changes in their status. So we asked the financial institutions, what proportion of the time or of your clients do you think they're keeping you proactively updated when things change? When they change shareholders, beneficial owners, new directors, etc. They said 70% of the time, we believe our corporates are keeping us proactively updated. We asked the corporates, what proportion of you keep your financial institutions up to date on your changes? And less than 30% said they actually do. So there's an enormous disconnect there. And what it really means is the financial institutions are warehousing a risk that they perhaps don't fully understand or know that they're warehousing.
Steve, thank you very much.
Thank you.
And thank you for watching.